Thanks for having me. Good morning, everyone. Can you hear me? Just confirming.
Confirming we can hear you.
All right. So let me just share this screen. All right. And I'm hoping that you can see the screen. Yes. So I've done a little PowerPoint slide because I know when it comes in relation to taxes and anything tax related, it's more of questions and calculations, and sometimes seeing it in front of you, it might help. So quickly, for companies and for people coming to Guyana that would like to set a company up, the company incorporation requirements that would be needed, and we'll just go through this quickly because of time. You must have a proposed name of the company. And what would usually happen is that that name will have to be checked at the deeds registry to ensure that it's not already in existence, or it is not too close to another existing name. That usually takes 24 hours or one working day. And once you have that clearance, then you can proceed with the other registration documents. You would need a local address in Guyana for the registered office. That can be provided if you don't have a physical location, either by your lawyers or by your accountants, who can allow you to use their registered office. And of course, you would need the number of shares that you would like to issue. And if you will have any restrictions on the company, the business that you will carry out. Usually, no one puts restrictions on, but you will have to know if you would want to do that at the start. And of course, you'll need the name, addresses, and occupations of the incorporators, who are your directors. And of course, you'll need one company secretary. As a point to note, the directors and or secretary does not need to be Guyanese to incorporate your company. So there is no requirement that directors and a secretary need to be Guyanese. After that, whatever you're bidding for, you will have to know the requirements for those. In addition, there'll need to be picture IDs for each director and secretary. Once those documents are obtained and signed by the incorporators, it takes approximately 7 to 10 days for your company to be registered in Guyana. And once you have that company registered, the next step would be to apply at the Guyana Revenue Authority for a taxpayer identification number. Their taxpayer identification number basically is a computer-generated number that is issued to every entity, whether it's an individual, a business, even a government department, so that you can conduct business with local banks, with a central bank, and with government and any other registered business. Now, a point to note before we go on is that for that company to have a TIN, each director and secretary will also need to have a TIN. So if your directors and secretary, you're not in Guyana at the time of registering the company, at some point they'll need to get that TIN so that the company will have a TIN as well. Now, once your company is registered and you have a TIN, the next step that you have to do after your first year is to file your corporation tax return. And I suppose this is what most people would be interested in. Now, as a point to note, your tax returns are due by April 30th of the following year. So, for example, the tax returns for 2020, 31st of December, will be due by April 30th, 2021, unless the Guyana Revenue Authority gives an extension. But all things being equal, 2020 tax returns will be due by 2021, April 30th. Now, in Guyana, there is a dual tax rate for companies that are engaged in commercial and non-commercial activities. And it's very important because the dual tax rate for commercial and non-commercial activities is fairly new. Now, a commercial activity is any activity that is carried out by a company that does not produce the goods manufactured by it. So in other words, if you're going to be buying and selling goods, importing goods and selling those goods, not manufacturing it, in other words, a retail, then you are deemed as commercial, and that particular activity is deemed as commercial. A non-commercial activity is any activity that is not commercial. In other words, any service that you produce or any good that you produce, you manufacture, or that it basically goes through a process before meeting the final product. Now, commercial activities are taxed at a higher rate of 40%, and non-commercial activities are taxed at a lower rate of 25%. And that's very important because a company can have both commercial and non-commercial activities. So, for example, my company, I can have commercial activity if I buy and sell paper, and I can have a non-commercial activity if I provide, for example, a service of consultancy. And in that regard, it will be very important for companies to keep proper records of their expenses so that at the end of the year, you can apportion that or apportion what percentage goes to the commercial aspect of the business and what percentage goes to the non-commercial aspect of the business. So very important, commercial companies, their activities, they pay 40%, non-commercial pay 25%. All right. Let's go to the tax returns. As I told you, your tax returns are due by April 30th of the following year. And in Guyana, we pay taxes in advance. So your taxes after the first year are due to pay in advance in quarters, March 15, June 15, September, and December 15. So after your first year, you pay your taxes in advance, and that tax is based on your previous year's return. All right. Now, failure to pay your taxes by April 30th of the following year, includes or it incurs a penalty of 10% of your outstanding tax. And GRA is very strict with your penalties. I can guarantee you that. And even if you've made a deficit or you've done no trade, but you have a company registered, you still need to file a nil return by April 30th, or there is a late fee or a penalty of $50,000 minimum. All right. Good. So corporation tax in Guyana, again, you have a commercial and a non-commercial rate. Commercial rate, 40%, non-commercial rate, 25%. Companies are also required to pay property tax. Now, a lot of people get mixed up with property tax and they say, hey, we don't have any buildings in Guyana, so we don't pay property tax. Property tax is a tax on all immovable property, as well as any other rights you may have. So, for example, it's a tax on your bank account as well. Now, how you find that is you add all of your assets together, everything the business owns in Guyana, and you less all of the liabilities, everything that the business owes. And the figure that remains is net property. So if I have a building worth 40 million and I have a loan for 20 million, it's 40 less 20, and my net property is 20 million. And the tax rate you see there below, it's on the first 40 million of net property, you pay nothing. On every dollar of the next 20 million, you pay 0.5%. And every dollar for the remainder after 60 million, you pay 0.75%. All right. So initially property tax, you don't incur because that first 40 million, it's exempt. Notwithstanding that, when it's nil, that property that your company has, you still need to submit a nil return, or else that 50,000 penalty comes in. All right. So the two taxes for a company that you need to be paying attention to, firstly, is your corporation tax, 25% for non-commercial activities, basically for services, and 40% if you're going to be buying and selling products. And your property tax, which is a tax on everything that the business owns minus everything that the business owes. All right. Another tax that a lot of people ask about is VAT. Now, mind you, VAT is charged in Guyana at a rate of 14% on taxable services and goods. And a business must be registered to charge VAT. So please note, you must be registered. You cannot charge VAT if you're not registered. A lot of businesses I see, they come to us, they've never been registered for VAT, but they include 14% on their invoice. Kindly know that's illegal and you will be penalized by the Guyana Revenue Authority. We have some services that are zero rated. I wouldn't go through those because of time. If you have any questions, you can ask it. But electricity, right? The supply of machinery in relation to electricity from renewable energy sources is exempt from VAT. So if you want to bring in your solar panels and set up, you're free to do that without VAT. Food items, financial services, and locally raw mined gold and transportation services. As of this year, the government has removed through the budget VAT on certain items. I don't know if any of this would be of use to you. Perhaps what you would want to note is construction and building materials no longer attract VAT. So if you're planning to construct an office here, and also vehicles for agriculture, forestry, and mining. All right. But I guess the most important one there would be your construction and your building materials. All right. Now, very important, and maybe you'll make a point here. VAT is mandatory once your sales reaches or exceeds $15 million. Now, there's a point to note. It is $15 million within a 12-month period. However, the Act also says that if it is projected that your sales will pass 15 million in the next 12 months, then you should mandatorily register as well. So that is very important because as of now, you may not have done 15 million sales for the last 12 months, but if you're anticipating to do 15 million in the next 12 months, you will need to register for VAT. If you do not, please know that the Guyana Revenue Authority reserves the right to go back and register you for VAT, and they have the right for to demand payment of 14% on everything that you would have invoiced in the last 12 months. That is whether or not you were registered. So as a safety, as a precaution, once you anticipate that your revenue will touch 50 million and over, whether previous 12 months or the coming 12 months, you should register for VAT. Because again, the Revenue Authority reserves the right to go back and backdate your registration. All right. Now, a lot of notes there, but just quickly to summarize it for you. If you don't pay your VAT, right? Now, VAT is due 15 working days after the month end. So, for example, January's 2020 VAT was due on or before February 21st. All right, so 15 working days. We don't include Saturday and Sunday. So February will be due sometime in March 20th or 21st. If you don't submit your VAT on time, please note there is a penalty of $1,000 or greater for each day, or 10% of the taxes owed. So in other words, they're going to find 10% of the taxes owed or $1,000, and you pay the greater. So it's $1,000 each day or 10% of the taxes owed. That's the penalty. There's also criminal, there's also a criminal penalty if you don't submit your VAT return, a fine of $15,000 or $2,000 per day and an imprisonment of 3 months. But I'm supposing we're not going to get to the criminal aspect because you're going to submit your VAT on time. All right. So note that it's 15 working days after the month end. All right. Now, quickly, for your company, you have corporation tax, you have 2 rates, you have property tax, and you have your VAT. The one that a lot of persons are interested in is their employees. Now, point to note, in Guyana, we have a deduction at source of income for employees. In other words, you pay as you earn. So the company that you're employed for or the company that is hiring is required to deduct employees' taxes and remit that to the Revenue Authority. Now, the question keeps arising, who should pay PAYE? Especially if you're not a Guyanese, or whether I should pay withholding tax. And I'm sure most of us know the withholding tax rate of 20%. So in Guyana, right, there's the Tax Act really says that any individual that is resident in Guyana for at least 183 days or 6 months is considered to be a resident and should pay taxes in Guyana. And if you're employed for 183 days consecutively, right, generally you're an employee of that company. Now, there's a point to note, and it's open again for discussion, but the Guyana Revenue Authority has been interpreting that 183 days as 183 days in a calendar year, whether consecutively or cumulatively. So in other words, what persons used to do, they used to work maybe a 90 days, take a month off, and then work another 90 days, take a month off. Recently, the Revenue Authority has been saying, look, once it's 183 days in a calendar year, whether or not it's consecutive, you are a resident in Guyana and you have to pay taxes. All right. So that is something that you need to consider. So once you're in Guyana 183 days, welcome to Guyana. You're a resident and you have to pay taxes, whether withholding or PAYE. Now, withholding tax is a tax charge on gross payments to non-residents. All right. And it must be made, the payment must be made within 30 days after the gross payment has been made. So, for example, if you pay on the 30th of November, you must submit to the Guyana Revenue Authority by the 30th of December their taxes, their withholding taxes. Generally, it is 20% on all payments, all gross payments. You're not allowed any expenses with withholding tax. Whatever is the gross payment, 20% of that. However, Guyana has treaties with 3 main territories: Canada, the United Kingdom, and CARICOM. And the rate differs for those countries and citizens of those countries. All right. As you can see in Canada, it's 15% generally and 10% for royalties. For the United Kingdom, it's 10% and 15% for interest. And for CARICOM, well, dividends, you pay no withholding tax on, but it's 15% royalties and interest. So as a worker, in other words, if you come as a consultant and you work in Guyana, you pay your withholding tax. If you come from Canada, the UK, or CARICOM, you will pay 15%. Any other country in the world, you pay 20%. That is provided that you're not an employee. And please keep in mind again, it's generally 183 days cumulatively in a year that determines whether you're an employee or not. All right, so that would be your withholding. Let's basically do PAYE quickly, and that would bring us to an end of this, or to the end of this. Now, every person in Guyana that receives salaries or wages must pay PAYE. Now, it is the employer, the company, that is required to deduct that and to pay that over to the Guyana Revenue Authority, right? If the business does not do that, the business is liable to a fine. Now, a point to note, in Guyana, we have now, just as companies have dual rate of taxes, in Guyana, employees have dual rate of taxes. So if you look at the last bullet point there quickly, and then I'll just show you a quick calculation. Individuals with an income, a chargeable income of less than 1.5 million, 60,000 per annum, that's about 130,000 per month, pay tax at a rate of 28%. Individuals who go over that, which most persons might go over 130,000 per month, there's an incremental rate for every dollar over 130,000. And that is at a rate of 40%. So if your chargeable income is 150,000, your first 130,000, you pay at 28%, and every other dollar, that 20,000, you pay at 40%. All right. In addition, we have a tax threshold that is non-taxable. If an individual earns 65,000 per month, right? The first 65,000 is tax-free. However, if your income is equal or greater than 195,000, then that threshold increases from 65,000 to 1/3 of your gross salary. All right. So that might be a lot to take in. So let me just do a quick calculation for you and you will have an understanding of it. All right. Also quickly, in Guyana, companies are required for employees to deduct national insurance. It is not as one person asks. If it's compulsory, it is. It's not a choice. You must deduct it. Now, it is a payroll system. So 5.6% of gross salary is deducted from the employee and paid to the NIS. And the employer is expected to pay 8.4% of the gross salary on their own behalf for the employee. All right, so let me show you a quick calculation here. All right, so if an individual, a resident, works for a gross salary of 500,000, just quickly here, all right, your gross salary, 500,000, your non-taxable is 65,000 per month, or if it's above 195,000, well, we know it's above 195,000, it's 500, then it's 1/3 of the gross salary. 1/3 of 500,000, we have 166,667. So the first 166,667 would be non-taxable. So 500,000 less that non-taxable, all right? And the employees NIS, it's 5.6% of gross salary to a maximum of 280,000. So gross salary of 280,000, that's the max you deduct. 5.6% of 280,000 is 15,680. So 15,680 is the maximum you'll be deducting any given month. You don't go over that. So it's 500,000 less 166,667, which is your non-taxable, less 15,680, which is the employee's NIS, and your taxable income becomes 317,653. On the first 130,000, we pay 28%. So 28% of 130,000 is 36,400. And then the remainder, so 317,653 minus 130,000, it's 187,653. The remainder, you pay 40%. 40% of the remainder is 75,000, 6-1. So if you add 36,400 and 75,6-1, the total taxes paid for this month would be 111,461. 500,000 less 111,461. This employee will be taking home 372,859. And you see the deductions will be NIS 15,680 and taxes of 111,461. And you notice that the tax rate is dual, right? The first 130,000, 28%, and the remainder 40%. And let's have a look. If the gross salary is 120,000, let's drop it below that 195. Your non-taxable is 65,000 because it's not above 195,000. So 120,000 minus 65,000 minus your NIS. Now, mind you, your NIS is 5.6% in this case of 120,000 because we don't meet that 280,000 threshold. 5.6% of 120,000 is 6720. So 120 minus 65 minus 6720, 48,280. So my taxable income is 48,280. The first 130,000, we fall within that bracket. So that whole 48,280 will be taxed at 13,518. All right. And the total taxes would be 13,518. And this employee, well, it should be 120,000. This employee will take home 120,000 minus 15,680 minus 111,461. This employee will take home 99,762. So you notice, right, that once it goes above 195,000, that dual tax rate kicks in. The first 130,000, 28%, the remainder 40%. If we don't go above, then the entire 130,000 is 28%. So what you need to take away from this is, if you're coming to Guyana, you're going to pay taxes once you're an employee. If you work for less than 183 days, you can pay withholding tax at a rate of 20% if you're in a country other than Canada, the UK, or CARICOM. Any one of those three, you pay 15%. Once you're coming here and working above 183 days, whether you work that in spells, it's cumulative, you're going to pay PAYE. You should pay PAYE. Your PAYE is at a rate of 28% for the first 130,000 and 40% for the remainder. And that would bring us to the end of the 15 minutes. I think I went about 3 minutes extra.